If you don't know how to multiply your wealth, get your money to make friends, or protect your dollars from inflation, you're probably poorer than you realize. I'm here to do one thing for you: help you stay rich. We're talking about how to make more of it and how the big boys and girls make it happen. I know this because we've grown our real estate portfolio from zero to over 300 million in just 6 years, and have sold our last 3 businesses for 45.2 million. These guys, do you know how they make money? If wealth equals freedom, then one of our purposes should be to grow that wealth as much and as fast as humanly possible. This puts you in the pilot seat of your life, not selling for one you don't truly desire. In today's world, everyone seems to want to tell you what to do and think. Distractions are everywhere. The question is, what is the strategies required to stay rich? This is where many high net worth individuals, those with at least $1 million in investable assets, stumble. Here's the answer simplified into 3 strategies. Strategy number 1, make more money. If you feel like you don't have everything figured out, it's time to take action. Looking back into our single-family renovation business, we realized that hiring help to manage projects could have kept us from burning out and allowed us to keep scaling what we started. While switching to multifamily was rewarding, it also meant starting over again and again. You see, a common mistake is giving up or switching directions when you hit a wall or when a new exciting opportunity appears. It's tempting to think, I'm done here, and jump to something else. But each switch means starting over. Compounding can't happen for you if you're jumping in and out of your career. You've done very hard to get to where you are. You've probably gone to college and spent definitely hours and hours to get specialized knowledge and became a genius at that zone. Don't let that compounding all go to zero just because someone on the internet made it seem like it's so easy to do whatever they're doing. I know someone who's a YouTuber who hit a rough patch, and instead of jumping into a new field like coaching, what I think would be useful for him is to focus on improving his channel with fresh strategies and added support. Jumping in between careers breaks that compounding growth that leads to real success, not just financially, but also in expertise and relationships too. And this isn't what I want for you. Ask yourself this: how can I make more money from what you're already great at? The key takeaway here is let your future self dictate your present actions, rather than let your past frustrations dictate what you'll do next. Consider how you can leverage people, systems, and tools to tackle any impossible challenges in your business. By focusing on what will 10x your growth, you'll weed out all the distractions and find clarity. Finally, don't let your past success make you complacent. Bring in people who are driven and hungry, who can push that business forward even as you step back to a more strategic role if needed. This is the right thing to do. Strategy 2, keep more money. Here's the thing: if you're great at making money, which we know you are, but you're not great at keeping it, spoiler alert, you might already be poorer than you think. Keep making money and do everything to keep more of it. That's a secret that nobody wants to tell you. In fact, this is the biggest eye-opener for me, and that's why we love real estate so much. So how do you keep more? Well, let's start off with taxes. Did you know that tax laws is fundamentally a series of incentives for what the government wants you to do? So they want you to get married, drive an electric car, send your kids to college, and provide affordable housing for people. And that's step 1 in keeping more of your money, by optimizing your taxes. Without smart tax strategies, it's like climbing up the wrong side of the escalator. You keep going back down because you're not moving in the same direction. You see, tax laws reward certain investments like multifamily real estate with significant benefits such as depreciation deductions that shields income from taxes. Compared to the stock market, which has at least a 15% capital gains tax, multifamily real estate can protect 40 to 50% of your income, meaning you save more money in the long run. Second step to keep more money is inflation protection. What is inflation? Think about what it means to inflate something. It's like a balloon. All you're doing is making it bigger. Well, the same goes for the economy. Inflation is simply the rising cost of goods and services, which can be a good and normal thing provided it doesn't happen too fast or too slow, all of which affects the purchasing power of your dollar, your hard-earned money. Another way to look at it is that your dollars are worth less and less each year. So essentially, it takes more of it to buy the same thing, same items, same services that used to cost less, which affects the cost of living and general economic growth. How do you combat inflation? I think the best way is to invest in assets that grows with inflation. If you're already tuning into us, we can safely say that you love real estate, right? And you with 100% conviction believe that real estate is an inflation hedge. So what we mean by this is that as the cost of materials and labor goes up, so does the cost of real estate, particularly in multifamily apartment complexes, both new and pre-existing. So if you're looking to get involved in multifamily apartment syndication today, and let's say the investment, the purchase price of the property is $70 million. In this scenario, in this example, with inflation hovering around 3%, you'll gain around 2.1 million in a year's time just from inflation alone. And in 5 years in this hypothetical scenario, that's $10.5 million in added value to that property. The third step is asset protection. Properly structuring your assets can protect them from risk. This requires working with skilled attorneys on both the tax and legal strategies, as some protective strategies may not be as tax efficient or vice versa. A solid plan keeps your wealth safe from potential claims or losses. Wouldn't it be awful if you lost all your hard-earned money because you didn't focus on tax optimization, inflation protection, and asset protection? Strategy 3, grow more money. Going from making money, a lot of money, building your empire, that's the dream, and I get it. But what they don't tell you about becoming rich is there's a chance you can lose it all. I once spoke to a peer who was making great money, but lost everything due to a few bad business decisions and a drop in demand for his services. He went from living in a mansion in Beverly Hills to a tiny little apartment. I advised him that real wealth comes from having your money make friends. The mistake many make is assuming they can always earn more money. For the wealthy, they rely on multiple streams of income. All you need to do is allocate your money and grow more of it. Another issue is cash on hand. Though as high net worth individuals, you may have significant assets. Much of your wealth may be tied to illiquid investments. This limits your cash flow, making it difficult to access funds when needed. To avoid this, it's essential to start building multiple streams of passive income, period. With passive income, you keep earning even after you step back from your active work. For example, a well-diversified approach could be in allocating funds like 30% in stocks or mutual funds, 30% in bonds or fixed income, and 40% in alternative assets like multifamily real estate. Real estate is a particularly strong option because it generates cash flow and appreciates over time. For instance, in multifamily properties, you can refinance to pull out equity tax-free without selling it. This borrowed equity can be repaid by the tenants who's renting the property, not from your pocket. Every few years, if the property's value rises, you can refinance again, gaining even more cash flow and often recovering entire initial investments. This creates a cycle called infinite return, where you own a valuable asset, but you have no more remaining capital tied up to it. The best part, you can then reinvest that initial capital into additional property, building multiple income streams for truly compounding growth. With these 3 strategies in place, you can make more, keep more, and grow more money. Oh, and watch this video. It'll help you grow your wealth without any hard work.